Things have to get worse before they get better for stocks in the long run.
In today's closing bell exchange, we have Mary Thompson, Rick Santelli, along with CNBC.com senior writer Jeff Cox, and also Tom Belesis, CEO of John Thomas Financial. Guys, lady, good to see you. Mr. Belesis, let me start with you. Do you believe in today's market rally? This is the week that we were supposed to see the saving of the euro. We know that's not going to happen at this point, not with this summit going so poorly already before it started. So what do you think?
I think this is just the beginning. I mean, there's a lot of notion out there, people are very concerned that, you know, the crisis in the European Union is going to get even worse. I mean, you have George Soros talking about, you know, Sunday that in 3 days, you know, the world's coming to an end. Here we are. The markets are up. There's green on the screen. Yep. You know, you got banks, you know, not defaulting, people making their payments.
Why aren't people scared?
I think that, you know, they're looking past what's happening now with what's going on in Europe. They're looking at earnings. They're looking at an eventual, you know, win in the White House with Romney. I think people are getting very confident what's going on in the marketplace.
Hey, Rick Santelli, why is the euro down? Let me ask it this way. Why are stocks higher if the euro is down? Why is oil higher if the euro is down? What's going on here?
And why are bond rates higher, which is an even more apropos question for a fixed income guy, but they're all the same answer, in my opinion. Obviously, in front of tomorrow's summit, there isn't a lot of optimism. There's a lot of uncertainty in our own country in front of the Supreme Court ruling. And I think when you put all of that together, there's a little bit of safety in our equities still, but with the bond to 10-year spread tightening 7 basis points from a difference of 12 to a difference of 5, of course, in our favor, the narrowest it's been since February. There's a notion out there that there's an entity or group of entities that are shorting some of these markets like the safe harbors, and it might not turn out well, but it's very fascinating to watch. So we have a couple of different dynamics going on, questioning some of the strategies that have thus far affected investors and how they think the outcome of Europe and the Supreme Court may both turn out.
Jeff, I see you nodding your head, Jeff. You wrote today about the lagging investor confidence when it comes to retail investors. It's all related?
Yeah, it really is. And I'm going to take the opposite side of what Tom said. I'm going to say investors are scared right now, and as well they should be, but in the long run could be good for the markets. Let me tell you about 2 things. Yesterday, consumer confidence survey from the Conference Board came out, a 10 percentage point increase in investor fear about the market. Now that has happened 7 times only over the last 25 years. On 6 of those occasions, market up over 10% on average. Now earlier today I was at Bank of America. Now Bank of America has been killing it lately as far as the forecasts go. They have a 1450 S&P target for the end of this year, which would be about that 10% gain, while they have a bearish outlook on the economy, 1%. Growth by the end of the year. Their 2 bearish indicators are fundamentals and technicals. Their bullish indicators are valuation and, yes, you guessed it, negative sentiment as a contrarian indicator that the market over the long run could go higher, even though we may have a rough summer here.
And by the way, we'll have the analyst on the next hour who's put together that 1450
Savita and I spoke
target.
Earlier today, yes.
Exactly, so we look forward to her thoughts on that. Mary Thompson, one individual story we're following right now, Barclays' settlement on the interest manipulation question. You're following that. What's the latest on that?
Well, it's it's interesting to note. I think it was discouraging, certainly for people who have watched the banking sector, that it's another negative for that group as well. It hasn't impacted the banks at all. The U.S. banks, anyways, certainly they've been higher. You know, I do actually want to pick up on something that you posed to Rick earlier about the euro being lower, the dollar higher today, because I noticed this earlier too. And I was asking some traders, given the breadth of the rally that we are seeing today, and given that the markets have performed pretty well over the last couple of days, especially yesterday when you had those negative comments coming out of Merkel, are we having a little bit of a disconnect from Europe at this point? Or investors, at least the smart money, starting to focus in more on the positive data that we've received here in the U.S., specifically on the housing market? And they said there appears to be a little bit of that, of course, with the caveat that there could be negative news coming out of the EU summit. But they certainly feel the housing data is a positive. In the equity markets, they feel that a number of people feel that if you're going to be investing, the U.S. is the place to be.
Yeah, but
right
don't
now.
forget, European stocks were higher today.
Yes, they were higher today, but I think people are pointing back to the comments made by Merkel yesterday that the markets were able to shrug that off, basically.
Yeah, let's remind everybody what that was, that there would be euro bonds. She didn't say exactly over her dead body.
Right,
She said as long as I live, they would not have them as long as I live. Exactly.
The market reacted to that for like 2 seconds, and then it sort of just went back the other way.
To me, it sounded like she doth protest too much. Like it's the moment, it was so extreme that to me it almost sounded like the breaking point.
You get to the point where people really aren't taking her so seriously.
What do you think, Rick Santelli?
I'll tell you what, I urge everybody to read that New York Times piece by Mr. Griffin of Citadel and a University of Chicago professor. They've jumped on board to things I've been talking about with my guests for months, that Germany should go back to the D-mark, let the rest of Europe go to the euro. Why do I bring up the story? Because he brings up a lot of the issues in a very objective way. What I think, Europe isn't going to go well, and there are many reasons to think that the United States and many of its markets could really benefit from that.
Boy, that would be the irony of ironies. We all wring our hands over about Greece leaving the Eurozone, and it could be Germany going. Huh?
Yeah, I mean, there's so much hysteria that at the end of the euro is coming here. We're very close to it, but it's not going to happen. And any type of good news that comes out of the EU summit, this market will go much further higher into the 4th of July weekend.
That's a big if. I can't imagine it. We'll see.
Thank you all.
Remember, this is the 14th summit to save the euro.
Jeff, Tom, good to see you. Thank you for joining us today. We'll see you later.
All right, one of the biggest movers today is Arena Pharmaceuticals after a huge drug approval by the FDA. Courtney Reagan is at the Real-Time Exchange. She's got the details. Courtney.
Well, good afternoon, Michelle. I mean, it's really the story of the afternoon, and second time is a charm for Arena Pharmaceuticals. The company's anti-obesity drug getting FDA approval after being denied in 2010 over concerns about tumors that developed in animals given the drug. Now, it's the first anti-obesity drug approval in 13 years. Good news for a lot of consumers and good news for investors. Heavy volume. Arena shares are really soaring. If you can see here, up 25%, and that's actually off the highs that we saw once trading did resume. We spiked up to, I believe, 40% or so. The company's market cap also growing by the minute, and if you got in shares a year ago, you're boasting a nearly 800% return on your investment. Not bad. I think the market cap a little over $2.5 billion at this point in trading today. Now, Arena's competitors Vivus and Orexogen also have anti-obesity drugs under review. Hopeful investors bidding up their shares. As you can see here, we have Arena to the far left, and then Vivus up more than 5%, but Orexogen, if I can get out of the way, up almost 15%. Again, investors hoping for a similar outcome. The FDA is expected to decide whether or not to approve Vivus's Qnexa in mid-July. And Arena Pharmaceuticals CEO will be on the closing bell at 4:20 today. You probably wouldn't have to look too close to find a smile on his face this afternoon. Bill, back to you.
All right, Courtney, thank you very much. We are heading toward the close. We've got about 50 minutes left in the trading days. Excuse me, Brad. The Dow up 85 points right now, so we're holding steady near these highs of the day.